So Tom Lee just had a brand new interview on CNBC, dropped the mic, blew everyone's mind, and honestly, I wasn't even expecting this either. He gave us an update. You know I have a trade on the small caps. Am I gonna make a bunch of money? Am I gonna lose a bunch of money? So I'm gonna play the video right now, and then after the video, I'm gonna do my analysis on this trade that Tom's talking about, how I played it, and how I think I'm gonna make over $100,000 on this trade, and I think it's even gonna be better than what Tom Lee says because the way that I'm doing it. So here's the video, and then I'll talk to you in a couple minutes.
We're climbing the escalator again. I think Jackson Hole is going to set a positive tone on balance just because the evidence is growing. FOMC members want to be forward-looking, as you guys are pointing out. Data dependence is dangerous at turning points. And then we get the jobs report for August, which I think should reverse some of things that could be temporary. I mean, that's a guess, and if it is, then recession risk is sort of reduced, but now we have real rates are too high, and that means investors will be comfortable with cutting. And small caps are really in the process of what we think is a multi-year bottom. Cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
How many cuts you think we get this year?
I'm looking at consensus, which is somewhere between 4 and 5.
Before the end of the year?
Yes.
So about 100 basis points?
I think that's right, but it depends on where inflation prints the next couple months. But our base case is that we're on a glide path towards 2%. That's better than consensus. So I think 4 to 5 still makes sense.
Now, I know you're saying that the bottom is in for the market from that early August move. I'm still fixated on your expectations for small caps. I've been talking about them a bit in this hour through the rest of the year. You still think that they could go up 40% by year end?
Yes. John, for small caps to rise 40% means that the PE, the median Russell 2000 stock, goes from 10 times to 14 times. So it's not asking the market to provide some magic and a huge revaluation. It's actually just saying small cap stocks, which have been left for dead largely because the Fed's been tight for almost 2 years, as they start to normalize policy and as mergers pick up, its merger activity has been accelerating this year, and it should really strengthen because it's a sign of CEO confidence. All of these flow through to benefit small cap stocks, and it's not like smaller companies are growing slower. I know people post all these stats about small caps losing money. It's mainly because of the biotech components basically don't make money, and that's the largest cohort of stocks in the Russell. But the Russell 2000 median earnings growth is almost 700 basis points faster than the S&P, and top line growth is almost 400 basis points. So you're getting better growth, lower valuation, and I think the catalyst is now when the market is convinced the Fed is embarking on a rate cutting cycle.
Okay.
Could happen Friday.
Okay, so if a 40% upward move happens for, say, the Russell 2000, what happens for mega caps? What happens for the broader S&P 500? Do you expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. NVIDIA's risen 40% in 8 trading days. So when someone says the Russell 2000, which is made of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that NVIDIA's done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk-reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk-reward. And I think money that's on the sidelines, or people who've been thinking bonds are going to be, and cash is the place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk reward, and I think that's small caps.
Do you need dramatic cuts for that thesis to pan out? Or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now, 5.5% versus inflation trending towards 2%, and getting rates back down to a neutral rate of 3%. If the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
Okay, now let me ask you about more about mega caps and about the consumer. How important, not necessarily just to small caps, but to the whole market narrative, will NVIDIA earnings next week be?
Well, NVIDIA is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. And of course, the U.S. companies, all of the big ones are all the U.S. I mean, it's a global phenomenon that benefits U.S. companies. So I think it's incredibly important. But NVIDIA, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell NVIDIA to buy small caps. I think NVIDIA is still a long-term buy.
So trades like this don't happen all the time, but when they do happen, I go hard onto it. That's why my portfolio is $800,000 right now, and my 2-year change was $536,000. So the reason why the Russell could pump so hard is because interest rates are going down, Trump's probably going to get elected, so that's good for deregulations, it's good for mergers and acquisitions, there's going to be more CEO confidence so that these companies are going to merge together, become one big conglomerate, and then they make more money. So that is positive for the Russell 2000. So that will make the IWM pump. Because you gotta understand, all these huge companies that these small caps are competing against, such as Apple, they have a ton of money on hand, they have a ton of cash on hand. So if Apple needs to go fund a new research and development project, they could just use their own money and fund it, and there's no interest on that. But if a small company wants to do that, they're usually cash strapped, so they have to take a loan to go use that money to go invest it in this other stuff. So they're very damped down on what they could do within the small caps. But when rates fall, and rates are expected to fall pretty hard, and I actually think inflation is a lot lower than what it's actually being reported at right now. So when rates fall, the small caps are gonna have all this extra money to go reinvest into their businesses, hire more people, buy other companies, shoot new products out there into the market. So this is what I have open in my portfolio right now, and you're gonna see below I have IWM, I sold some 215 puts, I sold 10 contracts on that, and then I bought the 220 calls. So I'm kind of flattish on these right now, I'm down like $4,000, but that's okay, I'm not worried about that whatsoever. The thing that you need to worry about is I bought 220 calls and I bought 15 call contracts. So since 2020, IWM has been in this massive consolidation, and I think it's ready to explode. Tom Lee's calling for IWM to hit $300 a share by the end of summer. $300 a share, and if my strike price is $220, I'm gonna make $80 per share. Now remember, I bought 15 call options, so that gives me the right to buy 1,500 shares. So if we make $80 a share times 1,500 shares, I'm gonna make $120,000 straight up just on them call options alone. And then the put options, I sold those for roughly $12,000. So 120K plus another 10K, I can make $130,000 on this trade right here. So that's why I went 6/20 of 2025 on the trades that I sent out there, because it's gonna take a little bit of time to realize the profit on these trades. But if you could be patient, I think I'm gonna make over $130,000 on this single trade alone. And things like that don't happen all the time. So this is a good trade setup. I've been shooting this out of my Discord. The second that I made this trade alert, I posted it. Check the description below. If you want all my trade alerts, we have a $10,000 trading account that in just 2 weeks, it's up already $700 on. Every trade that I do, I post there on this account and a $10,000 account. So if you want to find a really good video on trading stock options, the ins and outs, all the strategies, and how to not get screwed and lose your money, I made a video. The link for that is in the description below. I searched all of YouTube when I was learning how to do this stuff, and I couldn't find a video that was crystal clear that showed me all the examples, all the pros, all the cons to every strategy, and how to just not lose money, and how to find good opportunities to make money on it. So check that one out below. And if you made it this far, like, subscribe. I'll see you guys later.